You're here beating your biggest rival to going public. How does that feel, Logan?
Feels pretty amazing, and there's nothing better than we have all of our earliest investors and the team that's been with us, a lot of them since we started in 2007. Just feels incredible.
You're here at the new Lyft Driver Center in LA. You're not on the floor of the NASDAQ. Why was it important, John, to do it this way?
Well, we want to make a point that you can both invest in communities and build a great business. And our driver community has enabled us to be here at this point. So it was fun to ring the bell with several members of our driver community, have many of them participate in the IPO because we gave them a bonus to do so. This is just the start of how we partner with cities and the people we serve. And
you're giving drivers stock bonuses, right? That's kind of unusual.
Yeah, we're giving a cash bonus and the ability to participate through the Friends and Family program.
So let's talk about costs. There's a lot of question, how can you bring costs down? You brought in $2.2 billion in revenue last year, but you also lost some $900 million. How quickly can you bring those costs down, John?
Well, I think it's important to have the context that what we're going after is $1 trillion market opportunity. Every year in the US, Americans spend $9,000 owning and operating their car and using it only 5% of the time. And so this massive market shift, just like entertainment has gone streaming, is happening with car ownership. And we're investing to take advantage of that. Our economics are improving, and we're very confident in the path ahead.
So, Logan, in your risk factors, you say you may never be profitable. I mean, how do you convince investors that they should be betting on the optimistic here?
If you dig in on the numbers, every year the economics of the business improve, and we are confident that the business will be very profitable. There are, of course, risk factors, but we are making tremendous progress going after this once-in-a-generation shift where this entire industry, potentially, a $1.2 trillion market, could flip from an ownership model to a service model, and we're leading the way there.
So, could you be profitable in 5 years?
We can't talk on forward projections, but as we said, we're very confident in the long-term profitability of the model.
Now, in the weeks leading up to this, I've noticed I'm a Lyft customer, I'm an Uber customer, steep discounts. How is that sustainable, and how does that factor into your customer acquisition costs in the future?
One thing to know is that there's actually been rapidly decreasing numbers of discounts in the market. The times that they are used, we're really managing the balance of our own market. So something a lot of folks don't think about, but every year Americans make New Year's resolutions. They come back, make a resolution to lose weight and save money. And that means they go out less. But it's amazing what a 10% off coupon can do. It can break a New Year's resolution very quickly. And we do that because we have a lot of drivers on the road. Last year, 1.9 million drivers drove for Lyft. So we have a lot of drivers on the road, and when they're not busy, that's bad for business. So we'll give out targeted coupons as a way to take care of drivers and make sure that their business stays busy. But it's a very rational market, and that's really the reason driving it.
So you're speaking to something, you're making choices behind the scenes. You are prioritizing at times market share over margins or margins over market share. So
that's not the right characterization. This is really about the most effective way to drive growth and profit in the business is by running a balanced marketplace. So the coupons and managing seasonality are really about keeping a very healthy, vibrant marketplace and keeping drivers engaged because, the next week, after a slow week, the next week you have, say, St. Patrick's Day, and it's roaring and we couldn't possibly get as many drivers as we need on the road. So it's an important engagement.